Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3Live. Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we started off the day, futures down 6-7 handles. Everyone worried that European GDP a little light, euro was under pressure, even the yen gained some strength, and meanwhile, our markets took it in stride again. I think that the S&P was close to the 8-day moving average. Definitely a time to look to see how things reacted, and we just slowly grinded higher. And then what we did see is we saw a lot of things to do. In this market, if you don't want to take excess risk and you don't want to carry a massive amount of positions like you did earlier in the rally, because at different stages of the rally, you're allowed to take off a certain amount of positions. I know during the peak since early November, I think I topped out at 15 positions, and now I'm down to like 4 or 5, and I'm just looking for opportunity to not fight the rally, but look for nice setups for cash flow. I know a lot of guys actually on Twitter were asking me today, what's the difference between day trading and looking for cash flow or acute cash flow. Here's the difference. When you're holding swing positions over multi-weeks or multi-months, you're kind of letting the market work for you. When you see a nice setup on your swing position, you then could use that chart pattern, add to your existing position, and create cash flow within that move, and then sell it for that day, and then continue to hold your existing position, and then you just made additional cash flow to your swing stock that was trending with the market. If you happen to not be in a sector, like I wasn't in the oil service sector or the refiners, so today I saw SLB kind of ignite, and I just bought it, and I haven't really been following it. I like the pattern. I did a quick, made I think 1.5 points or almost 2 points, and I was like, you know what, I'm not committed to Schlumberger because I didn't do my homework there, but it looked familiar enough to buy, so I did a cute cash flow trade, and now I didn't swing it. So I just made money from the market knowing a tactic on how to do it. Also, last definition of cash flow or acute cash flow is typically looking for a acute trade within a trend. What that means is a stock's very extended and you're looking for like a short-term, counter trend move for that cute cash flow, but then you better get out of the way because when that trend continues, you'd rather be making the bigger money on the side of the trend. So anyway, go right to the chart of the S&P, and I'm going to just go through a lot of little patterns here. Here's the spiders. Okay, here is today. Here's the 8-day moving average. We held it again. Very good to know where this is because we've been basically trending with it since the start of the year. Start of the year was right here on this gap and go. Nice digestion. This was your time to start getting involved in positions that you liked. Here's your step up, and then this was when we broke through 1474, which on the spiders is 148.11. I think this is when a lot of guys peaked in their positions for the breakout. And then in this time period is when you trim and trail and look for rotation. Now, if you want to look at the OIHs, unbelievable move today. Look at that explosive move. Tight pattern, nice upper wedge. Different times and places to be involved. I think a lot of people tried to get a core position right around here. Then it consolidated and pow. You probably could have taken it home long and treated this as a new potentially multi-day trade because the size of this move and the actual the closing strength. You look at Schlumberger, which is the one that I went with, and unbelievable. Okay, 2 different types of trades here. This was when it broke the downtrend and cleared resistance, so this would have been pretty much your core trade. And then it had a really nice move. It let the moving averages catch up. And then once it cleared this 79 and change, pow. So you could have, and this is another good example, so to speak. So some people have been going with this group. They liked it better, and you can't go with every group. Sometimes you just don't have enough capital. So if just say you were in tier 1 here, and then on this breakout got to tier 2, then went back to tier 1 and said, you know what, I like this group. I want to swing it. In tier 1, you hung out, said you let it go back and forth, you let it consolidate, this big move. Then on this breakout, this is when you got back into a tier 2 for cash flow, and then perhaps into the close, you sell that last tier that you made because of this chart pattern, because of it going in motion, and then you get back to what you were comfortable with in a tier 1 to continue to ride out this trend. Because if you were in more than a tier 1 when it wasn't ready to go, you might have chopped yourself up being a little scared because you had too much size. So here was your additional trade for cash flow. Look at Halliburton. I'm sure it's very similar. Wow, unbelievable. People want to say equities are dead. Far from. PXD. No, look at that. Wow, look at that one. This one was a little nastier, but or choppier. But anyway, looking pretty good. So anyway, you come back to me. The place the money really rotated to today, were the refiners. As far as high beta tech, we were talking in the morning call today. Again, on Twitter, people are like, well, what now? I'm like, listen, if you want to follow us, there are lots of different ways. Our morning call is for free. Come to the site. Come to T3Live.com. We have a morning call express 5 minutes. We have a morning call 20 minutes, which is a little bit more tactical, only if you're a real trader and you want the nuts and bolts of what we're thinking about or how I'm approaching the day or what kind of offensive coordination I'm doing for the day. And we talked about high beta tech. And within high beta tech, lots of different strategies. Off the top of my head, I think of Google. Google, I was talking about best in breed, high beta tech name, near new highs. It's been holding above the last level, above 785. It can continue. You look at Google. Here you go. It's best in breed. This was your gap up after earnings, going sideways. You had a breakout, held again. Pow. Some guys on the VTF are taking it home long, and I think it's okay to do so. So this was a trending, new historic high trade, different. Something similar with a little bit more beta, so to speak, LinkedIn and Netflix. Talked about both of those also. Both were really strong after earnings, and they're not waiting for anyone to get in. But there's been some nice tactical trades as far as trading them with price points versus someone who's a big fund or could take the risk, who's just been holding them and says, I'm going to put them in the drawer because LinkedIn, we talked about last year as being one of those macro potential investments you could throw in the drawer and maybe have a multi-year winner alongside Coors and alongside Duncan, but that was a whole different type of thesis. But anyway, go to LinkedIn and you'll see, look at this. Okay, this was your big move on earnings. Then here was maybe a little tactical cash flow trade above the highs. Then it consolidated. And today I said with the futures down, perhaps go after LinkedIn, to go positive. And if it trades through 157.77, you could get another additional trade for cash flow. So with that said, if you were just holding this, congratulations. If you were trying to trade around the price points because you didn't know if it was ready to go or not, you also did okay. Netflix today was a little choppier. Netflix, didn't extend through the highs. But, you come back to me real quick, and I want to talk again about the different strategy on cute cash flow. Netflix, big gap up after earnings, 2-day move. Some guys created, cute cash flow on a counter trend move, but you had you couldn't stay past your welcome, so to speak. And if you look here, on earnings on the chart with Netflix, if you go back to the chart, you will see here is your gap up. This was your, second day, and then on this day, I remember shorting it. I'm like, I'm going to try and take a cute cash flow trade, which to me was against the trend, and you made some decent money here. Okay, it opened up, it was tactical, went below the prior day high, which was 172.68. So you could have shorted versus that high there and made yourself some cash flow. And then the next day it opened down. Okay, so if you took it home short for momentum, you had to cover when it went back above the prior day low, and you go the other way. Or you didn't go home overnight with it, and you said, I want to stay for tactics, and here was a nice tactical move. And then it flagged, and then it continued. So with that said, this bar, which could have made you money for a cute cash flow counter trend trade to this huge gap up and the crazy strength in Netflix, you have to pick and choose your battle. Overall, the guy that entered the trade and is letting it trending or letting it trend is making a lot more money than the guy looking for cute tactical cash flow. But anyway, another different type of trade. Then you want to talk another different tactic. So let's talk. Come back to me. Follow me. Okay? Amazon. Definitely a tricky stock. I was trying to short it a few days back. And, closed below the 50-day, and, I wound up losing some money in the trade. But yesterday, put it back on the map. Potent up day through a minor lower wedge pattern. So today it opened down $2.5, $3. So this pattern and this tactic was different. We talked about, said, give it a little bit of time, let it absorb yesterday's big move, and then it probably goes positive for cute cash flow. So if you went home long it and you wanted to add a tier on weakness, and then when it went positive, you sold it and stayed with your tier, or if you were flat, You said, you know what, this closed strong, we're opening down weak because of what's going on in Europe, not because of what's going on with Amazon. I'm going to trade it for a negative to positive move for cute cash flow. You look at Amazon, there you go. Okay, here's a chart. Here is when it toyed with the 50-day and never really had much follow through except for this day that kind of messed a lot of us up, but got out of it. But then this was a day, okay, that it ignited, broke this mini downtrend and it opened lower, but it also held the top half or top third of this bar, showing commitment. And what did it do? It went positive for cute cash flow. So now this trade could change a bit. If it holds here, goes sideways a little bit, creates another flag, then maybe you get a momentum move above this high for additional motion. So with that said, today was a nice little strategy, down $2 and change for it to go positive for, what did I say? If I had Darcy in here, he would say, you'd say for cute cash flow. So something to do as a professional trader. You need tactics so you could do some things. You know, the banks were not the place to be today. 2 days ago, you had a trending sector basing, and you could have added to Citigroup and Bank of America for cute cash flow on top of your existing swing, sold it, and then get back to what you are comfortably. If you look here, Citigroup is pretty much doing a good job. You know, here is your breakout trade for cute cash flow, inside day, held today, and who knows, this could continue again. You know, I took this as just an active strategy because I bought on this day, added, and then, you know, I sold it yesterday. And now it looks like if it gets above here, it might go again. Bank of America, I'm still long because that's the one I chose to swing. Overall, this too. You know, here is your long base, your add for a core. Here is your stay with tier one. And look at this, a trade above for cute cash flow, back to your core or back to just tier one. And then this is when it got a little choppy and broke to the downside. And this needed to be worked off, which it did. And then it broke out above that 1195, and now it's holding it. So with that said, we need to see if that can continue. And as of now, it's giving you signs that it can. Goldman's still, riding this 8-day moving average, still trending higher. And who knows? Who knows when this will end? And at this point, I don't think that if you're looking for an entry in Goldman Sachs, this is the time now. But for anyone trying to short this, for anything more than a cute cash flow trade, which has not really been that cute, it's probably been a bit more ugly than cute, you're not doing so well. You know, here is when it broke 121. Here is your gap up, to start another move, and pow. So anyway, a lot of different sectors, a lot of different stocks, a lot of different movement for different type of cash flow. You know, GM went home along the calls for an earnings type move, and the earnings weren't enough, and it opened flat, pushed up a little bit. I sold my calls. Everyone on the virtual trade floor saw it leave, and I lost over half of what I put into just a shooter call. You know, I said, okay, I'm going to take a chance into earnings. Some guys thought maybe it could be positive, and it wasn't enough. So I said, you know what? My risk was premium paid. So I risked a little bit, and I lost. Big deal. It happens. Part of the business. But again, if you took the stock, it got a little trickier, and look what wound up happening here. And now you're stuck in a stock that looks a tad bit broken. It traded through the highs, couldn't hold it, and this was your exit when it went back below, and now it closed on the dead lows. If I was long this stock, I'd be a little worried. Some guys are probably going out short. I lost money in calls. It happens. Not going to win every one. GE was a good one. This one actually also still looks really good, holding higher. So I'm still swinging this one because I chose to use this as a swing trade, and gave you a lot of different tactics. From when it broke out from the wedge right here into earnings with a call spread, then switching over to stock, and then being able to add right here, and then getting a little lucky by adding on the close for that news above the old highs. So with that said, there's a lot going on. There's a lot of rotation. There's a lot of cute cash flow trades. There's a lot of trending trades if you want to sit in it. There are areas to put on another tier, take off a tier. There are small spots to be short. BMW, we listed on off the charts. You look here, that is a weak stock. This is tactical, huge gap down. Never even tried to fill it to try and say that it's on sale, so that's how weak it was. Started triggering to the downside, and look where it closed. So this was more of a relative weakness tactical play for a short to the downside. Baidu, I'm not sure yet. It's not getting anywhere. Moving averages are catching up. It's still hanging around here. It could break that level to go to the downside. I have no position, but I'll watch it. Apple was a decent two-way trade. Didn't really have much tactics or much teeth today. Here is the high, and then here's the trend that's been in place all the way since September. Here is last week's nice little 4-day trade. I did go long it, when it went from negative to positive. I tried to stay with it and didn't really work out on the second level. I didn't take it home long. And if you want to be a reach, or be a reach, if you want to reach, some could say, and I'll be one of those guys to say it, there is a small chance, very small, that it still looks somewhat constructive, that it's still holding a portion of this move from the lows. So in order for this to get going again, it's going to have to get above this 473 with some type of authority in order to potentially break this descending trend line that's controlled this stock on every rally. Boom, failed. Rally, boom, failed. This one didn't even make it there. Will this time be different? You don't know. So at this point, I'm still taking Apple day by day, and there's a lot of other things out there that are a lot cleaner, that are making people a lot more money. So don't be just enamored with Apple. I've traded this a lot less in the past few weeks. One of the, to close out was a nice surprise, was RIM, BlackBerry, whatever they call it now. I know Sperling's been trying to get a bottom there, and I haven't traded it in a week or two, and then all of a sudden the news came out that one of the guys sold his entire stake, and it was at the bottom end of the range, and I figured it seemed as if it was sold out, so I jumped in also. A lot of the guys in the community bought it too. If you're in your seat and you know how to maneuver, sometimes you get pleasantly surprised. And if you look right here, this was a really nice trade. It opened down, some waited till it went back above the prior day low, which was 1381, okay, and then look how it closed on the highs. So overall, on a macro basis, it's building a really big wedge where you could have maneuvered each end of it, but today was a very nice tactical long. I know Sperling took some pain, but after on the fourth down day, he also could take that pain because that's where he lives, and he lives in bigger size than most guys out there. So he was able to hold, buy more, and I'm pretty sure he had a really good day in BlackBerry. So with that said, that's the beauty of the virtual trading floor. To listen, take what we say, make it your own, figure out what your time frame is, what your risk tolerance is, and listen to us talk about it. If you guys know that Sperling tends to have a lot more positions than me, he takes a lot more size, but he's not as precise, and then all of a sudden I get involved when I think it's a little bit more precise, then you put 1 + 1 together, you go after it, and then typically I'm usually crying because I sell too early, and then I get a better price than him and I sell it quicker, and then he holds it longer, and he winds up making a lot more money, but that's where he lives and that's where I live, and you have to figure out where you live. Anyway, happy Valentine's Day. I hope you have a great time with your significant other. If you haven't called your parents and they're still around, which I hope so, make sure you call your mom as well, or maybe even you have your kids call them because they love that. And I know when Chase called my mom today, she was very happy. So anyway, have a great night. Tomorrow's Friday. It's been a decent week as far as movement, and hopefully you're capitalizing on it as it's changing each week, and as this rally continues to move higher, you just change your tactics a little bit, but not fight it, just change and evolve, and we'll see when something really does change. And at this point, it's still the same trend, and that trend has been strong. Have a good night.